What the f just happened? Over 2,000 crypto traders dead after yesterday's market crash. Constant Galish found dead in his Lamborghini yesterday after a historic market crash.
What you just saw and heard is an unfortunate story. Over $6 billion was lost yesterday due to liquidation. This strategy I'm about to teach you will help you hedge against the market volatility, and we call it the hedge mode or Binance future hedge mode or any crypto future hedge mode. So without this hedge mode, if you pay attention to my screen, I would have been liquidated. Here now you could see that my Kowa USDT is on negative $200. But if you compare this to my Kowa long, you could also see that I'm also making close to $200, though the market is fluctuating. So this is what the hedge mode could help you avoid. Now pay attention, let me show you what the liquidation looks like. What you just experienced here now is what we call liquidation, and there's so many reasons why so many traders get liquidated. The very first one could be you using too much leverage. The second one could be you not setting a stop loss. In this tutorial, I'll be showing you guys how to hedge to avoid liquidation, how to hedge to lock loss or profit is very important, how to hedge to find trend, whether if you are finding it difficult to know where the market is heading to. By the end of this tutorial, you should be able to pinpoint it using what we call the hedge mode. And then when should you start hedging, especially when you are losing? Please, if you find this content very useful, or contents on finance, crypto investments, and how to trade very useful, don't forget to like, subscribe, turn on your notification to get recommendation from all our next videos, and then don't forget to share this to your friends so that YouTube could recommend it to other crypto traders who are in need of it. First of all, what is liquidation? Liquidation means your trading positions get automatically closed. For example, here I was trading this crypto with no stop loss, and automatically I lost $20. When you lose up to $20 or the amount you had when you were trading, automatically Binance will close your trade. That is what we call liquidation. To avoid the liquidation, there's so many things you could do. So for today, I'll be teaching you guys how to avoid the liquidation using what we call the hedge mode. So to set the hedge mode, by default, your position is under what we call one-way mode. To explain the difference between the one-way mode and the hedge mode, let me use this coin for example. Let's say I got 0.2 of this coin, and then I click on buy long. Using this already now, you could see I already have this trade going on, even though my liquidation would be when it drops to 164 USDT. Now, using this stuff now, if I want to close this trade now, if I click on 0.2 this and I click on sell short, you will see instead of the short to open, it automatically closes the other trade. To open both long and short for the same coin simultaneously, you need what we call the hedge mode. So click on this three dot here, click on preference, and then click on position mode. Then click on hedge mode. Now click on this arrow here to go back, and now you could see something like open long, open short. Instead of open long and close short, you are now seeing open long, open short. Let's do the practical again. Same 0.2 using market price, 0.2 using market price, click on open long, and then 0.2, click on open long. Same 0.2. When I click on, currently I'm under this now. When I click on this is it. This is the 0.2 open long. If I try to click on the same 0.2 open short, you see now currently I have two trades going on, ZEC long and ZEC short. Since I'm already in profit and I open the same amount, that is 0.2, 0.2. This is what we call locking of profit using hedge mode. If you are on loss and you open the same amount of coin, it means you are locking loss. Here I'm locking profit. So this is how to use the hedge mode to lock profit. It means at any point in time, I would always make 0.5 cents. If you look at this place now, at my available balance here, it neither changes any time. It will never change. The only thing is it might either increase, but it will be at the range unless I'm paying a trading fee. At any point, it would always be at 39.07. At any point, it will always be at 39.07 because I already locked my profit or loss. Even if this one is on loss and the other one is on profit, I will still be on a net profit because I locked my. And how did I do this? I made sure that my ZEC long size, which is 0.20, and my ZEC short 0.20 are the same. This is how to lock profit or loss using the hedge mode. Now, how do you hedge to find a trend? For you to hedge to find the trend, there are two key things that has to be the same. Your entry price and the size of coin must be the same. Once you do this, you are locking profit and you also locking the direction of the trend. When we say we are using hedge mode to find trend, it means the one that is more on profit is where the trend is going. So to do that, first of all, you have to use the limit order to open the long side. The current market price is 268. I would like to open the market at 267 and then enter the amount you want to open and then click on open long. Now this is under the open order. The error now is if you now go back and click on 267 and you want to open 0.2 again and you want to open 0.2 and click on open short, your long has not opened, but if you click on open short, you will see that your short has opened, which is very, very wrong. Here you could get liquidated easily. Though now the trick here is let me shock you, though now that our 267 has, the other side has opened to at 267 266. If you see now, our short opened at 267.27 and then our long opened at 267.24 and our liquidation price here is at 5,001. This coin can never go from 260 to 5,000 before the bull run end, and the bull run is very close to ending. This coin has been going, the market has been manipulated, this especially for this month or this week. This particular coin, the market has been manipulated. With this now, I just explained, where do you think the market is heading to? Currently, you don't know where the market is heading to. This kind of coin, you wouldn't say, if this coin moved from 267 to 265, you wouldn't use that to categorize that the market is heading to the short direction. No, that the rule here is for you to know where the direction of the market is heading to, you must allow this coin to trade for at least 30 minutes. So after 30 minutes, when you come back, that is when you could only say whether this coin is going for long or short. Currently, because of the case of this class, let's assume that this market is heading short. So what could we do? If we are already determined that the market is heading short, what we'll do is not by closing the two trade. What we could do is now to add more trade. We are currently on 264 and then 0.2. We add more trade and click on open short. When you add more trade just in the direction of the market, that means look at this thing now, since this is the direction of the market, which is short, my short is making more profit after 30 minutes. Now, all I have to do is to come here, open more short, 0.2 down, and I click on open short. So I'll wait for it to come up. The reason I didn't add the current market prices, which is 262, is because I know this market will still come up a little bit. So now the short has been filled up. So that is how you add more trade in that direction of the market. Let's presume that I'm already losing. When is the right time for you to start hedging? That is always the question. When is the right time for you to start hedging? I always have a principle. Once you have lost, irrespective of the amount you are trading, let's say you are trading $50, $200, $200, once you have lost $2, lock your loss. Once you have lost $2, lock your loss, come back after 30 minutes and reassess the market. Now we are losing 0 point something. To lock your loss, all you have to do is, my current price size of coin here is 0.200. Get my point? Once you have lost $2, lock your loss. Here I don't need to lose $2 too, because I'm in this tutorial, I'm already on a loss. If you have 50,000, if you are trading with 50, this is how to use the hedge mode to avoid liquidation. If you are trading with $50 and below, if you lose more than $2, lock your loss. If you are trading with more than $100, if you are trading with more than $100 or $100 below, if you lose more than $4, lock your loss. If you are trading with $1,000, if you lose more than $20 or $35, lock your loss. And the easiest way to lock your loss is, for example, the size of ZEC I'm trading with here is 0.200 ZEC. So if I want to lock my loss, I need to buy the exact amount of that 0.2, irrespective of the market price. Do you get it? Irrespective of the market price as of the time I'm locking this loss, irrespective of the market price. Once you click on, because of the only trick here is that the amount, this is the size of ZEC, 0.20 ZEC, 0.200 must always be the same. Even if you are buying 10 Dodge, that 10 Dodge that is already on loss is what you buy. Click on open short. Click on open short. So with that now, I've already locked my loss. You see how simple it is to lock a loss. With that now, I already locked my loss, and my liquidation now is very, very fast. And once you lock your loss, leave the trade to run for 30 minutes and come back after 30 minutes to reassess your trade. That is how to prevent liquidation on hedge mode. It's very important. Don't lose more than $2 before you start hedging. Once you lose $2, start hedging. Leave the trade for 30 minutes and come back for what you call reassessment.